Hey guys, happy Saturday, January 11th. We are about 4 weeks away from AMC reporting their 10K, in which we will find out the Q4 results and we'll get a summary of the entire year of 2024. So in this video, I want to kind of talk about what should we expect when we get that report. I'm going to look at the analysts' estimates for Q4. We'll compare that to my spreadsheet. I want to talk with you briefly about the 50 million share ongoing dilution and why the company is doing that, in my opinion. And we need to once again talk about the fact that the company is effectively out of shares if they need to have any future cash raisability. That's the topics we're going to cover in this video. If that is of interest to you, stick around. Let's get right into it. For all of my paranoid and conspiracy friends out there, no, I'm not paid for by AMC, by a hedge fund, or by anybody. I look at numbers, I read filings, I listen to what management says, and I try to give you a non-emotional take on what the company is saying and what is likely to happen. The Q4 box office ended up at $2.338 billion. Not quite as good as I was hoping it would be, but better than any year since 2019, as you can see on the table here. For the year, that brought the total box office to $8.559 billion, a 4% decrease from last year. And in light of the fact that we had the actors and writers strike still affecting the number of movies that were released in Q1 and Q2, that's a pretty decent result, although I would have preferred 2024 to beat 2023, but hey, I'm not in charge of when Hollywood strikes. Based on that box office for Q4, the analysts over on stockanalysis.com are estimating revenue for AMC around $1.31 billion for the quarter and a earnings per share of negative 22 cents. If we look over on Yahoo Finance, we have a range of revenue estimates between $1.24 billion and $1.35 billion, with the average being $1.3 billion for AMC in Q4. The earnings per share over on Yahoo Finance average is negative 14 cents for Q4, with a high estimate of negative 8 cents and a low estimate of negative 17 cents. Looking at my spreadsheet, which is what I use for my own tracking and predictions of AMC's revenue, expenses, and cash burn, we're going to start with these pink boxes, which is what percentage of that total box office for the quarter came to AMC as revenue? And I use that number to extrapolate out a global number. Last quarter, that number was a little bit low, around 28%. If we look at the analyst expectations for Q4, they're saying revenue around $1.3 billion. That would put us in the 32% range. I like that number. I'd prefer it be the higher number. So let's focus on this column I right here, but we'll talk about the entire range just in case AMC doesn't have that higher percentage of market share. I think that with the amount of IMAX movies that happened in Q4, maybe it's reasonable to expect that AMC did better than average in Q4. We'll find out in a couple of weeks. Looking at that column I, if we use a total revenue for the company of around $1.3 billion for Q4, that gives us a gross profit of $194 million. And then after we take out the operating costs and expenses, operating profit, $61 million. And then finally, we're going to add in the interest expense, around $109 million, giving the company a total net profit or loss, in this case, a loss of around negative $39 million. If the company did not get as much market share as we are expecting in Q4, you can see here to the left, the net loss for the quarter could be a little bit higher, 65 million, 86 million. I'd prefer, like you guys, that it be the smaller of these three numbers. So we'll cross our fingers and find out in a few weeks, but I think it is safe to say that it's going to be a loss for Q4 no matter what. In Q4, we also always have the impairment of long-lived assets, this yellow boxes that I have here on the screen. And we do need to add that in. This is a non-cash expense where the company writes down the value of its long-lived assets. This is not goodwill impairment. It's just an annual write down on assets. So that will affect the numbers for Q4 as well. When we add that in, even though it is a non-cash expense, it does count on the net loss for the quarter. You can see that dramatically increases what I expect the reported loss to be for Q4. And then it's going to come down to what numbers do analysts or the company report? What ones are you looking at? Are you looking at the GAAP numbers or the non-GAAP numbers? There's going to be two different sets of numbers for Q4 as there is for every quarter, and they're going to be wildly different. Make sure you know if you're looking at GAAP or non-GAAP numbers when you're looking at the net loss and the net earnings per share. Because I am expecting AMC to report a loss in Q4 and in Q1 2025, that means that there is going to be some cash burn. And that is why I told the folks in my Discord in early November to expect a dilution announcement from the company sometime in December. They need to raise cash to maintain adequate liquidity on the balance sheet, to have enough working capital to run the business. So the fact that they did a 50 million share ATM, again, in my opinion, has nothing to do with the price of the stock. I forecast when the stock was at $4 in November that they were going to do a cash raise. It did run up to $5.60 or so, which helped them in doing that cash raise, but they did not do the cash raise because the price ran up. They did the cash raise because they're going to burn cash in Q4 and Q1, and they need to maintain that liquidity on the balance sheet. I see and read and hear on social media a lot of people talking about AMC paying off debt with dilution, and they have paid off $1.7 billion or so of debt since 2020. But now the bulk of the debt maturities have been pushed to 2029 or 2030. There is no immediate necessity for a money-losing company to dilute shareholders to pay off debt. All of that debt has been effectively pushed. As I think about the risk of dilution for AMC going forward, if they are raising money in 2025, and including the one that's going on right now, I don't think that it is going to be to pay off debt. I think that if they raise money, it's going to be to cover any other liquidity issues, any cash flow issues, or potentially for CapEx issues. If you recall Adam Aaron talking about the Go plan. Now, I hope they don't do dilution just to fund CapEx, but I can't tell you what they're going to do. And I do know that in the last quarterly earnings call, they seem to want us to pay attention to that Go plan. So I think you should pay attention. In fact, for my Q4 cash flow analysis or cash burn analysis, I don't know what the CapEx is going to be from AMC for Q4. I have it estimated at 60 million. They told us at the beginning of the year to expect between 175 million and 225 million. And if we put in 60 million for Q4, that would get us right around 215 million total for the year. Did they accelerate Q4 CapEx because of the Go plan? I don't know. We'll have to wait a couple weeks and we'll find out when we get the Q4 results. The free cash flow is something to pay attention to as an investor, especially if you're one that is worried about dilution risk. If the company has a negative operating cash flow and they're spending money on CapEx to either take care of maintenance on the business or invest in future growth, future earnings of the business years down the road, that is going to result in a cash burn. And then you have dilution risk unless the company is operating profitably, which AMC is not yet, because the box office is not big enough for them to generate a profit just yet. You can get mad at the CEO or the CFO, but guys, they are looking at these same numbers, and you can look at these numbers and anticipate these things coming up, and then you understand why they are making the decisions they're making. They're not trying to hurt you. They're not trying to penalize you. They're not trying to stop a short squeeze. They are trying to operate a business, and the numbers are the numbers. It's the same ones that I look at every quarter. It's the same numbers that any professional analyst or credit agency like Moody's or S&P looks at. And if you're not paying attention to what the analysts are saying, and you're not paying attention to what the company is disclosing to you in the risk factors, or you're not listening to someone like me walking you through these numbers in painstaking detail, I get it. You might think that the company is doing something illegal or they're trying to hurt you, but numbers are numbers and numbers don't lie. And you can all do this work yourself. If you don't like doing the work, tune into the channel. I'll tell you what you don't want to hear. The best way out of this hole and never-ending dilution for AMC is for the box office to grow. So So go see a movie, go buy some concessions, and don't be one of those people that is encouraging people to boycott the company, because then you are hurting everyone. Now, if you want to hurt all retail investors, whatever they might believe, go ahead and keep on telling people to boycott AMC. I'm not here to tell you guys to buy or sell AMC. I don't care what you do with your investment. I don't own any right now. I sold my AMC again in November, as I warned folks in the Discord to expect a December dilution. And I will take a look at it once I find out what is going to happen when the dilution is done and what they're going to do about being out of shares. Effectively, the company has 1 million shares left to raise money with in the future. Now, with this cash raise that's going on right now, that will get them through Q4 and Q1. And hopefully the remaining quarters in 2025, there's not so much cash burn and they don't need to raise cash for that. Maybe they need to raise it for CapEx, the Go plan, I don't know. But it is a risk for the company to not have any cash raisability. And I think that they will take some action at some point this year to do something about that risk. They're not going to sit on their hands and only have 1 million shares. In case something goes wrong, they need to have cash raisability. What is going to happen in regards to that, I can't tell you, and I can't tell you the timeline either, but I do expect them to do something. Simply put, I think it would be bad risk management on AMC's part not to have some cash raisability. That doesn't mean that they do a reverse split and authorize a bunch more shares and then immediately go diluting. I don't know that they need cash right away, but they could do that. They could. They don't tell me that sort of stuff. I'm just out here guessing just like you guys. But I am just saying, from a risk management perspective, I expect them to address the fact that they're out of shares. And we will have to stay tuned to find out. And that is a risk management thing for my own investment choices that I am looking at, and a reason that I am not in the play at the moment. AMC is and always was a speculative trade. You guys all know that. You all knew that before you hit the buy button. Always have a trading plan, understand the numbers, listen to what management's saying, read those 10 Qs, make sure you understand the financial statements. And if you do nothing else today after watching this video, go to the latest 10 Q and read all of the risk factors that the company discloses to you that you should be aware about. They're the same ones that have been there every single quarter since 2020. And if you haven't read them yet, why not? Everything that's happened, every decision that management has made, everything that they've done has been fully disclosed in advance in the risk factors of every 10Q since 2020. If you guys have any questions or comments, leave them for me down below. Go see some damn movies, buy some concessions. Thank you for watching, and I will see you on the next video.